Good morning. I'm really honored and so happy to be together with Johara Farhadieh this morning. And Johara, thank you so much for joining us right after Thanksgiving and a busy weekend. So nice to be with you.
You're welcome. Thank you for having me, Afsaneh. It's an honor to be here with you.
So welcome all to this session of RockCreek Insights. As I said, I'm very honored to have Johara Farhadieh, who serves as the Executive Director and Chief Investment Officer at the Illinois State Board of Investments, otherwise called ISBI for short. In this position, Ms. Farhadieh has been responsible for investment management, all the operations, and the execution of ISBI's investment policies, as well as assisting the Board of Trustees of ISBI in the strategic direction and helping to design the strategic direction. Ms. Farhadieh also leads the continued effort of promoting diversity and inclusion within ISBI and the financial industry, and has been a role model for many women and other diverse professionals herself, with her own career and everything she does every day for her own team and others in the community. Under Farhadieh's leadership, ISBI has developed into one of the nation's leading pension funds with key accomplishments, including the restructuring of a very large defined benefit program, as well as a full re-enrollment of the deferred compensation plan, not a small feat. Prior to joining ISBI in 2007, Johara completed her MBA at DePaul University, and she started her career as a portfolio manager, rising all the way to as being Chief Investment Officer in 2016 and the Executive Director in 2018. I think the first person, Johara, right, to have both positions at the same time.
I believe so. I believe so.
She is responsible for over 20.3 billion of defined benefit plan, as well as a 4.5 billion deferred compensation plan, which is invested on behalf of more than 100,000 state employees, retirees, and other beneficiaries. I can go on and on about Johara's accomplishments at ISBI, but also at the various boards that she's involved with, the nonprofits that she has helped to get to a much better place. As I mentioned earlier, she is a champion on diversity in what she does every day, but also her work on ESG has been really important, and she's been starting to educate the board and others on ESG impact in investing. She is on the board of directions for the Farhadieh Children's Hospital, and is recognized in Crain's Chicago Business 40 Under 40 in 2018. So we won't ask about age or anything else like that, Johara. The performance of ISBI has been incredibly strong. In fact, you were ranked #1 recently in terms of overall performance, also for your private equity investments performance. What would you say, this success was due to, and how do you attribute it?
Yeah, I'm so proud of the portfolio, Afsaneh. I'm so proud of the team. It's been a long sort of 5-6 years of us sort of revisiting, and really we set out a goal of being the best run public pension fund in the country. And it was nice to see and get this acknowledgement from the American Investment Council for ranking #1 in private equity. I would attribute it first and foremost to alignment of interest with our strategic partners that do manager selection. And so consistent with our investment policies. So our partners, Franklin Park and Hamilton Lane, oversee private equity for ISBI. I mentioned Scott Richards. I think his strong oversight of the portfolio, ensuring alignment of interest, ensuring that we have access to the best managers, it played a part in it. And of course, the consistent pacing, specific allocations to buyout and growth, and just being cognizant of it. And the part that I'm actually most proud of, along with the performance, really is the fact that 25% of that portfolio is committed to minority and women-owned firms. To me, for all the years that I've been advocating for diversity in the financial industry and trying to allocate to diverse managers, the first sort of conversation always was around fiduciary duty and performance and all of this. And then there would be a lot of studies out there that I'm sure you're familiar with that would say diverse managers outperform. This is real data, real numbers from an actual public pension fund. And so for me, that is a takeaway that I will I've been shouting it a lot. And I really want it out there, especially in these times, because that fiduciary duty sort of always comes up whenever talking about allocating to diverse managers.
This is such an important point, Johara. And a lot of people keep on saying they can't find these managers. Either they imply they don't exist or that it's very, very difficult to find them. What do you think? What's your advice to them?
Yeah, so I was on a small group, another sort of virtual small group with the Milken Institute, and they put different sort of groups together from foundations, public pension funds. And there's always someone who's had experience allocating to diverse managers and then someone in the group that's just thinking about starting it. And the first question I would always ask is, well, where do you go to source your managers? Because if you're going to the same place or using the same network, you'll end up with the same results. So you need to cast a wider net. You need to hire diverse individuals who have diverse networks and start going to, so I started naming the different networks or the different relationships we have. So I mentioned RockCreek, I mentioned Hamilton Lane, I mentioned some of our other partners where they've sourced diverse managers. So have you asked firms like that to help you source diverse managers? And it's such a simple question. And once you start to have like a deeper conversation around it, I think fundamentally that's part of it. And there has to be some intention in trying to source these managers. So I really believe it's sort of stepping out of your comfort zone and building a broader network.
I think you're so right, Johara, because it's what you keep on saying, the word network, which is, we all go to schools, we all grow up in different cities, we all, grow up in different groups of people, and that creates our networks. And I think, at least speaking for myself, and I have watched what you've been doing, I think it's really building out those networks every day, right? It's not the network you had yesterday, but how can you build on it? And as you said, it's not easy to find the diverse managers. They're not often out there marketing and knocking on your door, but congratulations on finding them and on putting them in your portfolio and on the performance. That's really a big deal. Also, I think one of the other things that you have been very unique about is creating this model of strategic partnership. I think it has been sort of done in different ways by different people at different times, but you have made it, sort of successful and a really important part of your program. Do you care to share some of the reasons you did it and how it works for you and what advice you would have for others? So going back to attribution, as I was saying, your performance has been very strong, and you were just very kind to mention the partners. But as I said, I think you yourself and your team have had a lot to do with it. But coming to asset allocation, seeing where we are today, fixed income returns are close to zero, right? Equity markets, every day we get up, we're not sure exactly what direction they will be going in the US, in China, in the rest of the world. Europe, obviously, and emerging markets are also changing very dramatically. US dollar is getting weaker over time because of the huge debt that has been accumulated. As you sort of look at your asset allocation, do you see any shifts coming? What do you think about that?
Sure. So in terms of our strategic asset allocation, obviously we're a long-term investor first and foremost. So never do we want to be reactionary to any certain environment. But the staff reviews the asset allocation on an annual basis, and then we, along with our consultant, and then we bring it in front of the board to review. Our goal is to not necessarily make any significant changes to the asset allocation when we put it in front of the board on an annual basis. We try to stick to more of a 3 to 5 year sort of deeper review. In light of the current pandemic, though, and everything that you sort of mentioned here, we took a closer look recently at our asset allocation and thought we've already sort of started towards somewhat of a barbell approach in our current asset allocation. And what we've been doing is sort of educating our board and putting in front of them where we feel that the portfolio could sort of add value, where we could take on a little bit more risk, but also be cognizant of, where we can protect at the end of the day on the downside. And so more recently in conversations we're having is sort of maybe juicing up more on the private market side, increasing, this has been methodical. We've been slowly increasing sort of our allocations to private equity. You're very familiar, but in the last 3 to 5 years, we've had a dedicated opportunistic credit allocation that's been strong. And then we're also looking, I'm a big believer still in long-term treasuries. I do believe in that, correlation does play a factor. I respect and understand that interest rates are so low. But I could tell you in March of, this year, when everyone was sort of watching the market, the volatility day to day was, causing everyone a little bit of heartburn. And for us, that same thorn in my side, which is the long-term treasuries that have been in our portfolio all of 2019, where I was like, why are we doing this? Played such a significant role in sort of protecting. And so for all my years, I've been an asset allocator. It's always been sort of this question on low interest rates and the role of treasuries in a portfolio. I'm a big believer in the correlation aspect and the fact that it's sort of free at the end of the day or cheaply done. Of course, our consultants are always sort of discussing other risk mitigating strategies. I always want to take as deep of a dive before sort of implementing anything that's sort of niche that only protects in certain market environments and that you're paying a significant fee for. So when it comes to that, we're sort of in the beginning stages of reviewing what that is. If I were to be very honest, I think it's a new way to find for hedge funds to find their way back into portfolios, but I'm going to be very open-minded about all that. So I think, again, focusing on that active book that we have, where we have strong allocations to concentrated public equity managers through our partners, and determining what the right allocation is there is where we feel we could generate alpha, as well as in our private markets book. Understanding that it could be expensive, so we want to ensure that we're getting access to top quartile managers. Otherwise, at the end of the day, it's never worth it. You always want to pay fees for value. So.
You talked a lot about diversity, and I think, Illinois State obviously has been ahead of many others in its policies. Your governance at ISBI has been very strong in this area. You yourself have been particularly strong. And I'm just wondering, in most cases, we hear a lot of people who give really good speeches on topics related to DEI. But when it comes to actually implementing them, they're finding it very difficult to implement. You talked a little bit earlier about your advice broadly on how to find managers specifically, but beyond that, what else do you tell people? And that is such a broad topic because it is about your own team. It is about the people you hire. It is about the culture that you've created, as well as your investments. And at the end of the day, your objective is to maximize returns for your pensioners. So how do you sort of look at DI, and since you have been able to succeed partly because of DI, as you said, can you give some advice to others who are looking at it, more recently?
Yeah, it's funny, Afsaneh, I've gotten more phone calls from endowments and foundations in like the last few months than I ever have about what it is that we do at ISBI around diversity. So I've organized my thoughts around it a little bit. And first and foremost, I think it starts with leadership. So we have strong support from our board. And I think it starts from the top there in terms of giving us the direction and setting the tone and setting policies. So I think by having the appropriate leadership that hires the appropriate management so that the staff underneath that management also understands the different policies and goals and objectives. And I keep bringing up policies because I think they're critical in ensuring an appropriate diverse program. Or if you don't even want to call it a program, just allocating to diverse managers, I think it's important to have policies in place. Policies sort of set the framework, identify the objectives and goals, and then if there's turnover in management or turnover in leadership, at least the policies are still there for others to sort of adhere to and continue. The last thing you want is sort of a haphazard type program that's only there because the individuals are there, and then it just won't achieve success for the long term. So I think having appropriate leadership management and then the appropriate policies, and specifically within the policies, there needs to be goals that are set so that there's transparency, there's measurement, there's sort of a purpose and intention in allocating to diverse managers. You know, part of our success, I think, is structured around our policy, you know, ensuring that we're adhering to the objectives of the board. Specifically in Illinois, there's legislation. So ensuring that we're adhering to the legislation in Illinois, it made it simpler for us because it created that infrastructure for us. And then we took that legislation and created a policy around it. So I think if you're going to start, I think that would be the critical takeaways, is in ensuring support from leadership, ensuring management that truly believes in it, and then having policies around it. So for ISBI, we have policies around manager utilization. We have policies around brokerage, utilization of minority and women-owned broker-dealers. We have it around staffing. So if I were to ever hire an individual, you know, the legal and HR sort of team ensure that it's a diverse pool of candidates and that we hire the best candidate from that pool. And then also just our vendor and contract and service provider utilization, just ensuring that we're also always trying to seek the best service provider out there, but being inclusive of diverse vendors as well.
So when you talk about diversity, you know, I think in the state, the definition is 51% ownership. To what extent do you think ownership is important? To what extent do you think other factors are important? I mean, in RockCreek, for example, as you know, more than 70 to 80% of ownership, management, board, interns, you know, happens to be diverse from the bottom up. But do you see, if people are starting with a lower base, progress is important? How else would you look at those parameters?
Yeah, that's a great question. I have a lot of thought around it, Afsaneh, but in Illinois, it is defined for us. It is 51% owned and controlled by a minority or woman-owned firm. And so we adhere to that. Do I think it's important to ask questions around that to all of our vendors, to all of our asset managers about their, you know, diversity when it comes to hiring, their diversity around service providers? Absolutely. So even if your firm isn't minority or woman owned, we still want to know about your efforts around diversity, because we understand the importance not only of cognitive diversity, but just having, you know, a diverse team in general will create for a lot of benefits, whether performance, et cetera. So for us, I'm open-minded about it, but I really believe having a definition around it, and I'm comfortable with the current legislation. Obviously, it's not my place to necessarily opine on that, but I think it's important to have a definition. And so I think having an ownership definition is one way to do it. If others want to do it another way, so for example, I realize in private markets, we run into issues with GPs having approximately 33% of the ownership being minor. There's no discounting or anything on our end. We want to have access to the best managers. We just won't reflect that manager in our number. But we also want to promote diversity in all ways and every way we can possibly can. So by allocating to that manager and hopefully ensuring that they're sort of bringing it back full circle and hiring diverse individuals. So I would answer your question in the way of, it's important to have it defined. what that definition is almost to each their own.
Absolutely. And I think, as you've always been incredibly data driven, having that data is really important, and then going with your governance and definition and encouraging others. Johara, another area that you've been leading into is ESG. You've been talking about that more recently. And I was just curious to know, what is your thought about ESG and sustainable investing, and whether you think that it will enhance returns, or is there any danger that it might detract from returns?
It's a tough question, Afsaneh. So Illinois has the Illinois Sustainability Act. And so the treasurer who sits on ISBI's board has been a leader in promoting ESG across the country within his portfolio at the treasurer's office. So we've definitely leveraged and leaned on them as a resource to sort of bring us up to speed. Obviously, as a defined benefit fund, it's slightly different. Anything and everything we do, always wanting to put the beneficiaries first. But I also believe there's ways to put them first and also be cognizant of the type of investments you make in a portfolio to ensure that those dollars will continue to generate alpha in the long term. So for ISBI, within our investment policy, and this is a lot, but I just want you to hear us out, we've ensured that our managers will always include material, relevant, and decision useful sustainability factors that they will ultimately consider within the bounds of fiduciary prudence. So similar to when diversity was sort of being advocated for many, many years ago, everyone wanted to ensure there was like a fiduciary prudence first and foremost. And we've been very successful in allocating to diverse managers without sacrificing any returns. I think taking on, these factors to ensure our managers are making the right decisions, and most managers and partners that we talk to take into account these ESG factors. It's just not codified in a way that folks can measure. At the end of the day, the performance, the types of investments will speak for themselves. I think the industry is evolving and it's around ESG. There's different groups out there that are allowing for ways to measure and factor what investment managers are doing, which will make it easier for asset allocators to sort of continue to hold them accountable. But for now, we have our policies in place and we want to ensure our managers and strategic partners are adhering to them.